and prosperity. Thank you for joining me. Today, I would just like to briefly share with you a letter that I use to remove off charge off. Okay. Now, in this letter, there's several hyperlinks that lead to other documents, and that's going to really be the main focus of this video, is to show you the information that I use, not so much the actual letter, but the information, because the information is something that anybody can use in the same situation. Now, your story and how you paint it around the information, that's got to come from you. So with that in mind, let's go ahead and go to the first hyperlink of my letter that I used to remove a charge off, so you can get a better understanding why it was effective. All right, so here we go. The first one is right here. All right, now that's going to bring us over here to the IRS website, which is the instructions for forms 1099A and 1099C: acquisition or abandonment of secured property and collection of debt. Instructions for form 1099A and 1099C, introductory material. So what I was doing in my letter was directing her over here to let her know that I can read, we can read, we are aware of what the 1099C is and what it's used for, as well as the 1099A, and how business incorporate these with their financial accounting. So no, I'm not an idiot. So I'm letting her know off the top, and here's my documents to prove it. Okay. So you will have a copy of this document in the below this video or whatever, so that you can download it. You can see how this works. And I strongly suggest you go down here and you just read it. If you don't know, you don't know. But once this information is brought to you, it's your responsibility to take it in and understand it, or seek to understand it. And the only way you're going to seek to understand most things is to read and take your time and understand. It's very direct. Who must file, when and where to file, electronic reporting, corrected and voided returns, statements to recipients, taxpayer identification numbers, backup withholding, penalties, and other general topics. All right. So now let's go back to the document and go to the next hyperlink. Okay, now we're going to go down here to the next hyperlink, which is IRS topic 453. Let's click here. That brings us right here to topic 453, bad debt deduction, on the IRS website. If someone owes you money that you can't collect, you may have a bad debt. For a discussion of what constitutes a valid debt, refer to publication 550, investment income and expenses. You click on that, check it out. And you have publication 535, business expenses. Generally, to deduct a bad debt, you must have previously included the amount in your income or loan out of your cash. If you're a cash method taxpayer, most individuals are, you generally can't take a bad debt deduction for unpaid salary, wages, rent, fees, interest, dividends, and similar items. For a bad debt, you must show that at the time of the transaction, you intended to make a loan and not a gift. If you lend money out to a relative or friend with the understanding the relative or friend may not repay it, you must consider it as a gift and as a loan. And you may not deduct it as a bad debt. So we're not loaning money out to no friends and families, and these so-called banks are not either. So they're calling them bad debts, and this is where they go to understand what they can do about their bad debts. Now, for those that are operating in commerce as business entities as well, we don't really understand what bad debt is either, because we too can have accounts receivable that are bad debts. Accounts that we think we must going to get paid, and we decide to forgive it. Now we have a bad debt, and we must take that deduction on our accounting as well. Now they say there are two kinds of bad debts: business and non-business. Business bad debts, generally a business bad debt, is a loss from worthless or a debt that was either created or acquired in a trade or business, or closely related to your trade or business when it became party to totally worthless. Partly, I guess it is partly, to totally worthless. A debt is closely related to your trade or business if your primary motive for incurring the debt is business related. You can deduct it on the schedule Form C 1040 profit or loss business, sole proprietorships, or on your applicable business income tax return. You see? The following are examples of business bad debt if previously included in income: loans to clients, suppliers, distributors, employees, credit sales to customers, or business loan guarantees. A business deducts its bad debts in full or in part from the gross income when figuring its taxable income. For the information on methods of claiming business bad debt, please refer to publication 535, business expenses. Then it goes on to talk about non-business bad debts. All other bad debts are non-business bad debts. Non-business bad debts must be totally worthless to be deductible. You can't deduct a partially worthless non-business bad debt. A bad debt becomes worthless when the surrounding facts and circumstances indicate that there's no reasonable expectation that the debt will be repaid. To show that a debt is worthless, you must establish that you've taken reasonable steps to collect the debt. It's not necessary to go to court if you can show that a judgment from the court would be uncollectible. You may take the deduction only in the year that the bad debt becomes worthless. You do not have to wait until a debt is due to determine that it's worthless. Now, my business owners, this is very important to understand how we can turn debts into tax credits by understanding what this means, or debts into deductions, they refer them to as. Report a non-business bad debt on the short-term capital loss form 8949, sales and other dispositions of capital assets, part 1. And we're going to go ahead and go on to the next part. But you see what I'm doing here? I'm showing the attorney that I know what I'm talking about on how these businesses operate. So they have to respect it because it's not my rules, not my words. It's the IRS. We turn this whole situation into a tax issue. All right, now let's look at the next hyperlink. Okay, now we're going to go down here to exclusions. That brings us here to Cornell Law, 15 U.S.C. Code 1681A, definition rules of construction. Okay, we have A, definition and rules of construction set forth in this section are applicable for the purposes of this subchapter. B, the term persons means any individual, partnership, corporation, trust, estate, cooperative, association, government or governmental subdivision or agency or other entity. C, the term consumer means an individual. D, consumer report. Now, what are we talking about here? This is definition and rules of construction. All right, consumer credit report. In general, the term consumer credit report means any written, oral, or other communication of any information by a consumer reporting agency bearing on a consumer's credit worthiness, credit standing, credit capacity, character, general reputation, personal characteristics, or mode of living which is used or expected to be used or collected in whole or in part for the purpose of serving as a factor in establishing the consumer's eligibility for A, credit or insurance to be used primarily for personal, family, or household purposes. B, employment purposes. Or C, any other authorized under section 1681B of this title. All right, we're talking about what is supposed to be on the consumer's credit report, right? First thing, what is exclusions are right here in 2. Except as provided in paragraph 3, the term consumer credit report does not include what? A, subject to subsection 1681S through 3 of this title. Any I is the first one listed. Report containing information solely as to transactions or experiences between the consumer and the person making the report. So you see where I got this from. Okay, I got this from the law. I didn't make that up, and I directed the attorney to refer back to exactly what I'm talking about pertaining to the construction of a consumer's credit report. Okay, per the law, it's not supposed to have that type of information. It clearly says a report containing solely information solely as to the transactions or experiences between the consumer and the person making the report. That's the first. Second one is communication of that information among persons related by common ownership or affiliated by corporate control, or communication of other information among persons related by common ownership or affiliated by common control. If it is clearly and conspicuously disclosed to the consumer that the information may be communicated among such persons, and that the consumer is given the opportunity, see, keyword is opportunity, before the time that the information is initially communicated, to direct that such information not be communicated among such persons. So they're supposed to let us know before they even put the information out that they're going to put the information out, so we can stop them from putting the information out. See what we don't know when we don't read? But that's me directing her to the hyperlink that I know where this information is. And what I'm really doing in this whole letter to her was letting her know that thank you for finishing one issue, but we got another one. And if you don't want to go ahead and nip this one in the bud, this one can continue to incur an oncoming cost with my wife. So let's just go ahead now and look at the next hyperlink, shall we? All right, now the next hyperlink is IRS publication 4681. Let's go there. All right, now that brings us over here to the IRS document publication 4681. And we're going to zoom in a little bit on this document here. Canceled debts, foreclosures, repossession, and abandonments. All right, as we scroll through this document, we have various amounts of information. We have the introduction on what this is. This publication explains the federal tax treatment of canceled debts, foreclosures, repossessions, and abandonments. Generally, if you owe a debt to someone else and they cancel or forgive the debt for less than its full amount, you are treated for income tax purposes of having income and may have to pay taxes on this income. So if they cancel in debt and they've charged things off, we need to know as consumers, because we may have a tax issue that we need to address because it's no longer debt, it's income. So that's why it's inaccurate for them to be reporting it on our credit report, because they're reporting it as a debt when it's actually income. Income doesn't go on the credit report. Not to mention the relationships and experience of people having with each other doing transactions isn't supposed to be on a consumer's credit report either, right? Isn't that what we just read? So you see how when we don't know, they take advantage of us. Okay? So I strongly suggest you take some time and you scroll through this cancel debts and where the 1099-C comes in, all right, for the accounting purposes of these charge-offs. So they supposed to send you that 1099-C when they charge things off. If they not sent or have not sent you a 1099-C, you should be asking questions if you have these charge-offs in your account, because it's possibly somebody's going to be doing some double dipping. All right, especially if a debt collector is now tracking you down for a canceled debt. What? You see how we stop this madness right here? So I'm just scrolling so you can see what this document looks like. You will have access to these in the link, and I suggest you read them. That's what they're here for. I'm just showing you and providing you the information and trying to make sense so that which you will understand it for your own, but don't take my word for it, because I'm not a tax preparer or an attorney. So, all right, now let's get back to my letter. Yeah, so now we're back to this letter, and as I mentioned in the beginning, I didn't really want this to be more about the letter. I wanted it to be more about the information. But if you are interested more into this letter, I'm going to have a link below this video so you can click and come to my school, and I will give you a better and more detailed breakdown. Thank you for joining me. Peace and prosperity.